Good evening and welcome to Your Money, Your Call. I'm Chris Kimber. Joining me tonight, Roger Montgomery from rogermontgomery.com, Ken, who's waiting on the line from Brisbane as well. Hi Ken, how can we help you?
Thanks very much. I just wondered if Roger could tell us the intrinsic value of Drilltorque, DTQ, for 2012.
For 2012, Drilltorque, DTQ. Roger, is that one of yours?
It's definitely not one that I own.
Yeah.
I think it's a relatively new company, isn't it? It's only just been... Is Ken still there?
Yep.
Ken, did it?
Yep.
When did it list?
About 5 months ago.
Yeah, I haven't put that data in. I don't have the data for that company. So what can you tell me about it?
Oh, well, they're a drilling company. That's about, you know, what they do. They drill for the oil, I think.
Do they make a profit, Ken?
No, they just rent out the drills.
Right, okay. Well, let me
make a profit.
Yeah, okay. So let me ask you, come back to me on an email if you like. Just send me an email at roger@rogermontgomery.com.
Yeah.
And I want 3 bits of information from you. I want to know what their profit was last year, what you expect it's going to be next year, and what the equity on the balance sheet is. They're the 3 things I'm after. So if you can give me those 3 things, we could put together a valuation. We own 2 gold stocks. We own Silverlake Resources, which I've talked about here on your show before, and we also own Troy.
Right.
Now, just in addition to what George has said, it was interesting, George Soros was out earlier in the year and everyone said that he'd sold gold. But what people didn't realise that he was actually buying gold stocks to get that leverage that George has alluded to.
It waited a few days to let that come out. Yeah.
Just to understand that, you know, if you buy gold companies that have a very high production cost, so that the cost of their extraction is high, then what you find is as the gold price goes up, because of the operating leverage that they have, they go from loss to profit rather quickly, and then every dollar that the gold price goes up, you know, it drops straight to the bottom line. Yep. So you're trying to capture that S-curve, that inflection point in these stocks, and that's what a lot of investors try and do. Find those companies that have a lot in reserve, very close to production or already producing, but have a very high cost base, and so they suddenly fall into profit when the gold price goes up. If you believe Jim Rogers, then gold's going to $2,000 or $3,000 an ounce. I'm not one to predict that. I don't know where gold's going, but for the reasons that George talked about, we have some gold in our portfolio, and as you rightly pointed out, it's done very well for us. I also own gold futures contracts personally, and I've owned that since about the start of the year.
He wanted to get our opinion on Matrix. It's come back quite a bit from its highs, and is there something that he is missing? So listen, we might start with Roger on that one, because I think you might know a bit about Matrix.
Yes.
Yep.
I talked about this in some detail. I've written a really extensive blog post, having seen the company twice when they reported or just after they reported. It's a company that I've been talking about on a lot on this show for a year and a half.
Yeah.
We in the fund didn't buy a great deal of it. I think we had less than 1/3% invested in this particular company because when we started the fund, the price to us was a little bit high. But the issue for us, and something that I talked about on the blog and in posts along the way, was cash flow. So the email, when the emailer asks, you know, what are they missing? The issue is cash flow.
Yep.
In the last 6 months, or the 6 months to June 30, this business didn't really generate any significant or substantial new orders. Now, that's a function of the fact that it is lumpy, but what's changed is that the market had the view, and I was one, that had the view that they had a plant in Malaga. To take people a step back, just so that everyone understands what this business does, they make buoyancy riser modules for drill bits, for deep sea oil rigs. Those deep sea oil rig drill bits, they actually sink without buoyancy. And so what that means is that they fit these things and they make a lot of money doing it. Now, they had a plant in Malaga. It was running at full capacity, and then they raised money to build a new plant. Ostensibly, that's why they floated, and then they had a secondary raising, raised more money to build this second plant. And the impression that the market has, whether it was right or wrong, or the impression the market had, was that this Malaga plant, they had so many orders that this Malaga plant can't cope and they need a new whiz-bang bigger plant. And so they built this new plant, and everyone thought that they would migrate to the new plant. But then the impression that the market had was that not only would they move to the new plant, but they would keep the old plant as well, and both of them would run at full capacity and the earnings would go tremendously higher. Then the full year results came out and we found out that it was a bit like that movie Field of Dreams with Kevin Costner.
Build it, they'll come.
If you build it, they will come, and they just haven't come. And that's the issue. So now what I understand about this business is that going from a booking to banking an order, so taking an order and then banking the money, can take longer than 8 or 9 months. So we really want this company, given it's already September, we really want this company to announce some substantial orders in the order of $114 million worth of orders on top of the order book of $100 million that they've got, in order to achieve what they've announced as being their revenue target for the full year, which is about $224 million, or an increase of 20%. It's really, really fine. It's right on the line now. That 8 months is now for the end of the financial year, so they really have to make some announcements.
Ian from Sydney, thanks for waiting on. What's your question for us?
I want to know what Roger values COH.
Roger, how do you when you get a recall of a product, how do you put that into your model and how do you work out what it's worked now?
Well, you put in some scenarios. So let's talk about precisely what's happened here.
Yep.
So the first thing is, we're not talking about a product that is life-threatening. We're not talking about a fault where people are going to die because of it.
Yeah.
In fact, I had a conversation today with an investor in my fund, and he made an interesting point. Jason said to me, he said, Roger, the interesting thing about this product is if you were told that you could hear with this product, so it would change your life, but there's a 1% chance that it wouldn't work, well, you'd take it, wouldn't you?
Absolutely.
And that's what we're talking about here. Now, having said that, they've recalled a product that is the bulk of their revenue. They've got an older product that, and depending on how many people are willing to take that older product, that will ultimately determine the impact on the revenue for Cochlear. It could be a small decline in profit of circa $20, $30 million. It could be $200 million.
Yep.
We don't know. Chris Roberts doesn't know.
Yeah.
And they're going to spend a great deal of effort working out what this particular fault is and whether they can improve it. But I tell you what, if you've got a business where since 2009, 1% of the products that you've produced have been faulty, you've got a brilliant product. You've also cemented your reputation, because you're saying, this is not our standard. We're not happy with this, and it's a big impost on the patients who are affected by it, and we're going to do something about it. I think this enhances their reputation long term.
Right. Short
term, yes, it's going to have an impact, but the way I've seen it, it's a little bit like a great company receiving a class action claim or some sort of a legal suit. It's a one-off. It's a one-time event, and then they recover from it. And in 10 years' time, you look back and you say, well, what were we worried about? Look at it now. And I guess the final point that I want to make about Cochlear is that based on the present, based on forecasts prior to the recall, our valuation on it was $53.94, so $54. So it's been expensive for some time, but now it's worth spending some time on. In fact, we bought a few shares today, not very much, and we bought a few shares a couple of days ago as well, when the announcement was first made. And I expect over the next 12 months we'll probably buy some more. There aren't many companies in terms of quality that beat Cochlear.
But Stephen, thanks for waiting on the line from Melbourne. How can we help you?
Thanks very much, Chris, and thanks for taking my call. Good evening to the panel. My question to both the guys is on a company called Corporate Travel Management, CTD. I own some shares in that, and it's a business that impresses me with its vision, and as does the management. So I'd just like some views on that. Thanks.
All right, great. Thanks very much for your question. Corporate Travel Management. Sorry to say, it's only listed there in 2010.
Late last year.
So Roger, what's it look like? I haven't looked at this at all.
It's an A1 company. It's a business that if I could have bought it in the float, I would have. Alas, didn't get the opportunity. Intrinsic value $1.58. rising to $1.90 and then to $2.18. It's trading a little bit higher than its intrinsic value this year, but I've got intrinsic value rising substantially over the next couple of years, and it's an A1. We only have a handful of A1 companies in the Australian market. This seems like one of them.